Shannon here from alphatrends.net. Today is Friday, the 23rd of April, 2021. We had a little bit of profit taking this week, but the markets bounced back very strong here today. You can see we're just slightly lower in most of these indexes for the week. Russell 2000 did outperform, as did the biotechs. They've been recent laggards. And the VIX, VXX, of course, split 1 for 4. And now it's a $40 stock that can continue to go lower and destroy wealth, which is basically what the VXX does over time. Here's a quarterly chart of it, and it's just been, it's a trading vehicle basically. Anyways, let's talk about real things like the S&P 500, which is just a stone's throw away from an all-time high. We saw this week that we had some volatility. We had held the volume weighted average price from this gap right here. I was thinking we would come down to the month-to-date volume weighted average price, but yesterday's weakness, we came right back here today, and it seems as though the theme is every time we have a little bit of a negative headline, short sellers rush in thinking it's the end of the world, and then they get squeezed the next day. So 410-ish is the level that I've been talking about for Alpha Trend subscribers this week as far as being the important level to continue to hold above. And as long as it does that, you don't want to look at this market from the short side. If you're shorting, it should only be really, I think, from an intraday perspective until we see some of the longer term moving averages starting to roll over and the market stuck below them. The Nasdaq, you can see the key level in here is about 334. That's a 15-minute time frame. If you're wondering what the time frame is, it's always up in here. Let's go over to a daily time frame. We held the prior breakout. A lot of people were calling this a double top. Those, again, are the people who don't have any idea what a double top is. It's just a level where we saw sellers twice, and now that level is still trying to be held as a level of support, and so far you can call it is acting as support in this general area. We've got a rising 20-day moving average that's catching up to this market right here, and below that we have the volume weighted average price from this low if we start to pull back. Next week in the S&P 500 as well, we have the same thing, the rising 20-day moving average and the volume weighted average price from the most recent low. The Russell 2000 has still been a laggard and still kind of stuck underneath this little band of resistance. If it can get above there and hold above there, I think you're going to see the Russell 2000 pretty soon at new all-time highs. So keep a close eye on that action. It was choppy this week. I was previously talking about being long over in here with a stop at this point, and it was good to get stopped out because I don't like to ride things from 222 down to 216. I don't mind getting out, with a point loss and looking to get back involved. So next week I'll be looking closely at the Russell 2000. Perhaps it can do something like pull back down in here, create a higher low, and then be a buyer somewhere in there. So that's one to definitely keep an eye on. The semiconductors, as we know, broke below that consolidation, and they came down to where? Well, right down to the rising 50-day moving average. Below that, we have the year-to-date volume-weighted average price. I kind of was thinking we might come down to there, but I certainly wasn't shorting for it. Here's where we see the intraday action, the volume-weighted average price for the week. We did close above, as well as the 5-day moving average. Got a little bit extended in here, so if you're looking to put new money into the semiconductors, they made it up to this prior band of support. Now, if they back away from it and then are able to bust up through there, I think you could get involved with a stop underneath whatever this new higher low ends up being as this 5-day moving average kind of flattens out and starts to turn higher. The biotechs also, they continue to fight with the year-to-date volume-weighted average price and that declining 50-day moving average. This is where we were 50 days ago. That was pretty much the high of this market. So I think that, in terms of looking for low-risk entries into the biotechs, you're most likely to see it do something like this before we see that next sustained move higher. That would give us the opportunity to get rid of this data over here with the higher readings from that 50-day moving average. And then if it consolidates, that 50-day moving average will flatten out. The 20-day moving average will be rallying up. So I think in the next week and a half or so, the biotechs will certainly be a place to look for a potential outperformance. Financials right back at those all-time highs here as well. Very quickly, I'll talk about Bitcoin. I got a load of shit from people. It was pretty funny. A week and a half ago, I had mentioned that I had gotten out just under $60,000, and people were telling me how stupid I was. It was hilarious. And, the market came down to my first target where I had mentioned this is where I was buying. I bought some today at 49,300. I have sold just now, just before I did this, a very small piece of that purchase right here. The rest I have out at 52,600. My feeling and hope is that we are still seeing some profit taking and likely to come down towards that $45,000 level. So Bitcoin, I think, is still, guilty till proven innocent on the intermediate term. And as far as individual stocks goes, there are still a lot of great setups out there. Chicago Mercantile Exchange just triggered today. It's still kind of in that range, so it's probably a little bit early. I only bought a watch list size piece, but that looks like one that could continue to move higher. Also got involved just recently in KEYS. This is Keysight Technology. You can see it's starting to move higher after this consolidation. And then CNSL is another one that I'm long, as well as EXEL. So the setups are still out there in terms of low risk, high probability setups. You don't have to chase stocks that have already rallied 10, 20, 50%. There are still low risk opportunities, and that's what I specialize in at Alpha Trends each and every day. I explain them in video format. If you haven't taken a look, come take a look. We've got a subscriber webinar on Monday. If you subscribe on Monday, a 2-week trial, you'll be able to see 2 of those webinars. Have a good weekend. Thanks for tuning in.